Okay, ladies and gentlemen, we're going to step 6 months back in the time machine to the beginning of this YouTube channel to see what's happened to the stocks over the last 6 months, from things like GameStop, Snapchat, stocks I don't own, stocks I do own. I think it's just going to be a fun little time and difference comparison to see if my opinions were accurate, if I made some mistakes along the way, and I think it's just going to be really interesting for this YouTube channel. So let's jump right into this. Welcome back, my passive income investors. Like today, welcome one, welcome all to the Passive Income Investor YouTube channel, where we're going to analyze stocks that I analyze to see where are they now? What's going on with them? Are they still around? Are they doing better? Are they doing worse? Was my opinion to buy, sell, hold? I don't know. I just think it's going to be really interesting because there's about a half dozen stocks we are going to analyze. And so I've woken up early just to get this YouTube video done for you guys. So consider slapping a like. The algorithm seems to like that. And if you're new to the channel, maybe consider subscribing. But let's go on over to the computer and we're going to start breaking all of these stocks down. So come on, guys. Let's go. I salute you, ladies and gentlemen of the 500. We're about to cross over. Makes this a beautiful time to analyze the 6-month period of my YouTube channel, considering it's been exactly half a year and we're about 500 subs deep. We're going to go all the way back and see the decisions I've decided to make, not only in my own personal portfolio, but just decisions and opinions I've had about other companies and stocks. And we're going to start off by looking at gold and then analyze each one of the positions, not fully, but just to take a quick glance at them to see where they are at today, because I have gone through a lot of companies over this short 6-month span. And it all started with me selling $15,000 worth of gold. So we're going to go through this, guys. Let's open this up with the gold chart to begin with. Let me go all the way back. I'm already in mid stocks. I'm kind of spoiling a little bit there for you guys. Spoiler alert, spoiler alert. But here we go with gold, guys. If we go 6 months back, probably to about December, it was right around November, December, I started selling. So we can see that gold was trading right around $1,700, which is where I think I was selling out a lot of it at. So we can see it's at 150. So I've lost about $150 in upside, which if we add up, I think I sold about 5 ounces of gold, 5 or 10 ounces, give or take, over that time period. So I would have lost out about maybe anywhere from $800 to $1,500 in profits that could have been captured over the same 6-month period. Is that a massive deal? Not really. It doesn't faze me too much because I'm not collecting dividends, and I guarantee the volatility in gold will continue to show those signs, considering the average rate of return on gold is only 2%. As we can see, guys, it's not my favorite thing to look at or hold anymore, so I don't really pay too much attention to it. Now, here's one that I talk about way too much, this prison stock. I'm going to stop going on about it. I'm not going to talk about it today, but I just want to show you the year chart because this was actually one of the first videos I ever talked about as well. I think it is up in here along with some of the marijuana stocks. GEO Group, where's that prison stock that I talked about? I know it's in here. It was like one of the first companies I talked about. It's one of these videos, guys. I'm not going to scroll through too much of this to find it, but I know it's in there because I started buying it. It was one of the first stocks I bought at the beginning of this year, and it was up on this peak up here, by the way. I was paying right around this price, 22 bucks, and I should be buying in these dips because I still think it's a good company, guys. Now, Afria, the marijuana stocks, we're going to find there's going to be a general downtrend to these guys, or a flat trend, because I don't think these stocks have the right to be at the levels they're at. If you don't know anything about the marijuana industry, guys, you have to understand you're not buying marijuana. You're basically buying into the government's regulatory issues. So you're just gambling on how much rights the government's going to give to you as a shareholder owning these companies. So if you don't understand the regulatory issues in Canada or the US, you should not be playing marijuana companies, because you are not buying marijuana companies, guys. You are buying government regulatory issues. You're just gambling on regulation. And if you don't know what the regulation is today, why are you buying marijuana companies? You just shouldn't be. And we're going to see a general trend line toward the downside as the marijuana companies are starting to purge, guys. I told you it was coming. I've talked about the marijuana purge for a while now, and I'm telling you, we're on the cusp of it, guys. So Afria, one of the largest marijuana companies, guys, we can see over the year has just generally been flat. The bigger guys have been holding on to roughly flatness. Procter & Gamble, guys, this was one that I talked about when the Gillette story came up, and I broke down Gillette, and I couldn't believe I got 139 views on this. This is like my first, oh, there's that prison stock, the deep dive into GEO Group. Sorry, I can't believe I missed that. And then right after, we did the Procter & Gamble, the good old P&G, guys. This is one that I held and then I sold. I was pissed that I sold it because I bought it from the 90s, sold out, I think, in the high 90s, early hundreds. Whereas if I just held on to it, we could have saw we're hitting toward a 30% gain. I want this back in my portfolio. I'm just not going to be buying it at these levels. The non-cyclical stocks and just the non-discretionary stocks, things that sell basic products we need, like toothpaste, which is what Procter & Gamble does, companies like McDonald's, anything that are just general stocks that you tend to use regularly, with products that are going to be in your life forever, have been on one heck of a tangent. So anybody bought this dip last year is probably loving the gains they're seeing in this company. And I put this company to buy, so I mean, anyone that's been holding this, good for you, high fives. Now we're looking at the Bitcoin, guys. This is something that I've been reaming on forever. I don't like Bitcoin. Actually, my bank advisor, the guy from the Royal Bank that gave me my $20,000 line of credit, doesn't like Bitcoin, but he loves blockchain. He thinks blockchain is going to get rid of escrow. And if you don't know what escrow is, it's just where people park money and pay lots of fees to deal with lawyers and all kinds of things. But I've been battering Bitcoin from forever ago. I won't talk about Tesla as much. We all know it. I think we all overanalyze Tesla, but maybe we'll look at GM, because the GM story has been wild. Now, I bought Tesla at the beginning of the year. As we can see, not been doing that well, but it's one that I still hold on to, that I still enjoy, but clearly in the short-term perspective of things was not a good buy at the price I paid. But I was comparing it to GM, which is actually outperforming Tesla this year, but no surprise there, considering Tesla's more of a stable company, or sorry, Tesla's more of a volatile company compared to GM. GM has this flat line over the years and has been paying a really consistent dividend. So if you're a dividend holder, you might get a low PE out of this company that'll probably continue to be around into the future as well. Now we're taking a look at Microsoft, guys. Microsoft is one of the picks I actually started buying heavily last year and into the beginning of this year. It's a company that I said was one of the most underrated tech stocks. Somewhere in here, I brought it up right around here, but it was about 4 months ago. I was telling people to buy Microsoft. I just couldn't get over the run that it was probably going to be going on, and I captured that quite nicely. See, guys, because about 4 months ago, when I started analyzing this company, or when I was buying this company 6 months ago to a year ago, and I only started making a video about it 4 months ago when it started rallying, and I just thought this was way too underrated of a tech stock. No one talked about it, so I'm glad I got it when I did, because I'm up about 2,000 or 3,000 US on this position, which is pretty nice. Now, looking at the gambling stocks, I talked about Wynn Resorts more recently. It's been on a bit of a run, but more impressively, the one that I want to talk about is MGM Resorts. This is one of the companies that pretty much runs most of the strip in Las Vegas. And I was recently there at the beginning of the year, so it was a company I had to talk about. And as we can see, if you bought it toward the beginning of the year, you'd actually be up quite a nice little bit, plus a healthy dividend with some dips along the way. This company has some volatility, but it is a gambling stock, and these stocks don't do well in recessionary times. But it still looks like it's on a bit of a dip, as many of the SIN stocks have been. All the SIN stocks have been on a healthy, what I'm going to call just a correction, even though the balance sheets aren't going down. But this company trades at a really high PE, which is what bothers me the most about it. But that seems to be most of these kind of gambling kind of stocks. And considering the size of MGM, I guess it's just the risk that you're going to take to get that kind of name. Now, here's a company that never ceases to impress me, and it blows my mind on a regular basis, and that is Icahn Enterprises. Every time I see Icahn Enterprise take these massive dips, I've always debated on buying it because of the absolutely absurd dividend yield. Because I remember when this company was going on with Bill Ackman, and essentially what was happening, I don't know if I can find it right here. Here we go. This stock pays a 10% dividend yield and actually has continued to. And if you go back there was a really crazy time period when Bill Ackman and Carl Icahn were going head to head in a battle about who was the better. And Icahn clearly won that battle. And this is a stock that's been around for a while, and it's just continued to do well since I've been watching it, guys. And you've been getting this insane dividend yield. The problem, again, is the PE ratio is something I've never been able to get past. But the fact that the company's been stable as it has been, considering all the stress this company went through with, when was it, Fitbit, not Fitbit. Bill Ackman was saying that one of the health products he was involved with was a Ponzi scheme. I can't remember what health company that was. I don't even think Icahn's part of that health company anymore, which is the funniest part. But either way, this company's done really, really well, and you would have got a nice dividend over the same time period. So year to date, not a bad buy. Here's one that I'm really excited to talk about: GameStop. If you go on YouTube and you look up GameStop, there are endless videos of people explaining how they ripped GameStop off. Nothing better than owning a company where endless people are talking about how they've scammed you over the years. And this company is one that I said I would not buy. I would not touch with a 10-foot pole. I remember it very vividly because there are people I know that are holding that company that thought it was a buy, and I can't believe they thought it was a buy. It's hiding in here somewhere. But I never ended up buying it. I could never put my finger on this one, considering there were a lot of people out there that were saying GameStop was a good buying opportunity. And how could, when you have Google coming out with Stadia, How could you possibly imagine GameStop being a good buying opportunity? The brick and mortar game stores are on their way out, and a year ago when this company was sitting at a decent chunk, guys, it's just continued to bled. Look at the dividend yield right now. Holy shit, 35.81. I don't even have to look at their books to tell you that this dividend is going to get cut. They have no PE ratio, which means they're not profitable, and the fact that they're still worth $400 million is jaw-dropping to me. But we'll just leave that one there and keep moving forward, guys. SNH is one that has been a part of many dividend portfolios I've seen in the past. I never bought it. I have a hard time buying REITs because there's a lot of intelligence that has to go into buying REITs. They're a lot more complicated than regular companies because you have to deal with a depreciation of assets. They depreciate assets to have dumbed down their tax payments every year. So you're owning real estate that's actually going down in value, but you're also trying to make it go up in value and make the dividends go up. It's a weird, challenging asset class. So if you're buying REITs, you need to be paying attention to a lot of different things, and I couldn't fully understand Senior Housing Property Trust, and I just know so many people that owned it, and clearly it has ran into some issues, and it was something I've talked about in the past, guys. I never put a buy or hold on this. It's just something that you really have to analyze and understand, and it was something I didn't understand, but their PE ratio right now sits really low. The market cap's come down a lot. The dividend yield seems pretty reasonable for a REIT. If you analyze it now, it might actually be a buy. Don't quote me on that. I am not looking at the balance sheet right now to understand this company any further. But of all the companies I've looked at right now, guys, this might be one of the better ones to fully analyze just because it seems to be at a half-decent price and it's profitable. So, I mean, just see what's going on with that, why they've lost so much of market value, and go from there, guys. Moving on, we're going to look at MedMen, a company I visited when I was in Las Vegas, kind of bringing that full circle around with MGM, a non-profitable company. But the reason I like this company so much is simply because they're a full circle company in the US. So they own storefronts, they're growing their own marijuana, and they're just doing a full circle company, something we can't even do here in Canada, even though it's illegal. So this was a company I actually put a buy rating on. I wouldn't even mind owning this. It is something that has been bleeding. This company will bleed with Canadian stocks for as long as there's bad news in Canada. Canada kind of reflects the overall market. But honestly, I think MedMen is more set up, more diversified. They are just spending money like there is no tomorrow to expand. And I think it's not a bad thing. It was something Canopy has been doing for years now. So don't batter them for expanding rapidly, considering they are making money selling marijuana, guys, their own product, which is a fascinating full circle company. So from the year to date, when I recommended buying this when it was trading around $4, not a good buy, guys. It's been doing pretty bad. I don't own it. But down here might be a good swing trade opportunity, guys, especially when federal legalization comes around in the U.S. The second somebody mentions federal legalization, this stock is going to skyrocket. I could see the same thing happen that happened in Canada. So don't quote me on that. It's obviously a gamble and a half, but if you picked up some shares in this, which is weird that it trades in Canadian as well, but if you picked up some shares in this, guys, I can really imagine this company seeing some high potential futures. And then we're going to look at Golden Leaf. This was one that I analyzed as well. Somewhere in here, if we find it, there's Senior Housing Property Trust, BTI. I talk about too much. I'm not going to talk about that again. It was in here somewhere. There's Hexo there. It was a company I only analyzed 3 months ago, and this will be where we'll start stopping the analysis of where are the stocks now, just because I don't want to start getting into stocks I talked about 2 months ago. We'll just look at the ones about 3 to 4 months into this YouTube game. Now, I don't think I put a buy rating. I think in Golden Hexo was something that I get battered about a lot. It was one of the more viral videos when I posted it. As we can see, it's got 1.3 thousand views. And this was a video where I said you're better off buying Constellation Brands or buying MO, Altria Group, because of the volatility in these stocks. There's no guarantees with these stocks. There are guarantees with Constellation Brands and Altria Group. It's just a good way to mitigate any risk in the marijuana industry. And we can see that risk as the stock now trades with a $32 million market cap. I'd love to see how many shares are outstanding to have a 5-cent valuation and be worth $2 million. This is a pink sheet, dangerous stock to own. To put it in perspective, guys, this stock is so dangerous that if you bought it when I was talking about it, you would have lost literally more than half of your investment. Scary stuff, guys. Got to be careful with these pink sheets. And then finally, a company that was also very interesting, which is Watt. When I looked into this company, I was shocked to find out that they are more of a patent company
than they are an actual investment company that is selling products. When you look into this company's balance sheet, you'll find they don't make any real money, and all they own is about 100+ patents. And this company was promising wireless energy, and I remember looking at this company when they were going on a massive run a few years ago because there was all this volatility. It was a very hyped stock, and that hype has progressively died as this company continues to file patents and not actually file products. So we can see it's lost 80% of its value from 2 years ago, and just from 6 months ago we have lost roughly, again, 34% of its value. But yeah, so these are the stocks, guys, from 6 months ago. I hope you had fun with me going through these.
I hope you guys enjoyed this video. I've been posting a lot of weird magic content on my magic channel. You're welcome to check out. I'm just about to, it should be posted by the time this video is up, and if it's not, it will be soon. About just a more emotional side, like how I became a magician. I might even post it to this YouTube channel. I've been debating it, but you're going to see a lot of weird, new, different. I'm trying out a ton of different content, guys, that I'm really looking forward to, and I'm just going to keep slamming this YouTube channel as hard as I can into the ground, guys, and I'm glad you're sticking around for it. So stay cool. Stay awesome, guys. I look forward to chatting to you real soon.